So you guys are going to tell me that the king pig of the market, NVIDIA, had earnings last week, and it broke out, and it failed. There's a war. The Straits of Hormuz are closed. We have an international conflict. But yet, market's flat. It's basically not down at all. We got a VIX at 21. There's absolutely nothing to worry about in this market, or at least that's what's telling us. What to buy out there, or is there nothing to buy? Let's cover some earnings from Broadcom. Let's talk to Jeremy Schwartz from WisdomTree. We need some wisdom on this market. I know Triple D is feeling better because I've been gone a week, and he's back in the groove. Folks, I'm back. I'm ready to analyze this market with you on Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, good morning, traders and investors. We're down 15 handles, down 30 handles from when the war. What big deal? 6,900, maybe that's a roadblock. Let's check on the buck. The buck futures are up 15 cents. A little flight to quality there with the $1.9888. TLT backing off that big rally down 46 cents at 88.69. Crude rallies 10, 12, 14%. No, don't worry about it, folks. Up $2.13 at 93.69. Gold, that's trading. Oh boy, it's trading active, up a couple bucks here, 474. SLV, that's up just marginally, up 38 cents at 75.75. Bitcoin futures, big old day yesterday. Did we find a bottom there? Down 2.25 today, 73,220, folks. We got some charts here. These charts are brought to you by Trade Station. Board the trade, chart, analyze, customize, all in one platform. Trade smarter, move faster, and stay in control. Built for serious traders and traders that want to be serious traders. Okay, let's bring this guy on. Triple D, tell me you're going to go out and run a marathon today.
I got a doctor's appointment this afternoon, so that's kind of where I'm at. Same, nothing's changed since you've been gone, Joel. Everything is the same. The S&Ps are in the same spot. Ignore the war. Ignore AI disruption. Ignore that the Berkshire new guy buys nothing except their own stock. Ignore all those things. We're in the same. This is the same. So, yeah, same spot with my health. Just, the perpetual flu/COVID long, whatever the hell it is. So, yeah, nothing's changed. What's changed in your life since you've been gone?
Oh, I don't know. Can you tell I got a little bit of a tan? I mean, can you tell that?
Not really. Sorry. You didn't tan enough.
No.
Not putting sunscreen on. You got to let the sun soak in there a little bit. You're like, you got the 50 on you. You don't get any sun on you. Bradster, come in here. Bradster, we got to talk with you.
Sit in the shade, man. Got to sit in the shade.
You guys are cracking me up already. You guys have been on air for 3 seconds together, and you guys are cracking me up already. It feels good. The boys are back.
Geez, someone's got to rein this guy in. I mean, holy mackerel. You can put the whip away, Brent, because the hammer's here. I am not going to let him overrun this show and talk too much. I'm just going to interrupt him. People need to hear the truth. The truth guy is here, and this market doesn't care about anything at all.
It only cares about buying the dip, the relentless buy the dip. And we talked about this a couple days ago, like when the markets were down. I was like, there's so much risk in this market. But I'm like, when we were down at 675 on SPY, I'm like, I'm not going to bet against the dip buyers because this is what they do. It did dip a little bit farther than that, down to 670, and then they just rip them right back here. Why is this relentless buy the dip mentality out there? We touched on it. I do believe intraday, it's institutional money managers that are just trading with other people's money. And they're like, well, if, the stock's closed here, now the market drops 1%. If I buy the dip today, I'm buying 1% better than my competition. So why would I not come in and buy that dip? They don't worry about like, oh, maybe it'll continue lower. They worry about being 1% better than the next guy. So that's the mentality that is out there. It is relentless at the institutional side because they don't give a crap about risk. Financial crisis is gone. You know, you don't have to worry about that. 2000, yeah, obviously, we just basically just kept printing money all the way out of it. Back during the financial crisis, we had like 10 trillion of debt. Now we got 38 trillion, but it's gone. It's, 16 years ago here. But that's where we are. It's just relentless buy the dip across the board. Retail does it to a certain extent too, but we've actually seen the script like flip a little bit here, where we've been weak overnight and strong during the day. And that's because I think retail kind of did get hit a little bit. Retail did get hurt a lot of their darling stocks like the Robinhoods and the Palantirs. The stocks really got beat up. So they're a little bit gun shy to just come in here and just buy the dip relentlessly. But the institutional money manager, hell no. They come in and just buy the dip blindly. Who cares? I'm 1% better than the next guy. And, if we lose money in the long run, well, I just got to be better than the next guy to keep my job. I think that money manager mentality is out there. I really believe it.
And, piling on top of this conversation, we, of course, have this Middle East conflict. There wasn't a ton of overnight updates. We heard yesterday, we've heard a few days ago that the U.S. was arming rebel forces within Iran. And we heard yesterday that U.S. armed Kurd/Iraqi forces were leading like a ground force against the regime in Iran. When we hear headlines like this, you would think the market would react. Not the case. A reminder that we were on day 5 yesterday of this conflict. We're on day 6 today, and it seems like the market is already ignoring these conflict headlines. CC Legator on Options Unchained yesterday, pointing out, well, you hinted at it a little bit. The VIX spiked to about 28. Okay, that's maybe a little fear, but then it came right back down to 21. CC was like majorly suspect of the VIX being at 21. He was like, this is for what's happening right now. This is not enough volatility. This is not, enough concern if you think the VIX is some kind of gauge of concern or fear.
There is no fear. The only fear is one from institutional money managers that, I'm going to underperform the next guy by buying the dip that's going to ensure that I don't. And then, it's just the fear of missing out. That is the only fear that is out there. Continues to remain the same. We have not had a serious bear market in 17 years, folks. It's been 17 years since we've had a prolonged bear market. We've had periods like COVID that lasted 6 months. But we have not had a prolonged bear market in 17 years. The last one we had was impressive. It knocked everyone out for, it ruined a decade of investors. I'm not saying that's going to happen, but I'm like, there's no fear of that. There's like, war is not going to do it. AI disruption, look like, okay, well, yeah, maybe, but now they're starting to buy the software stocks anyways. So, we're back to steady as she goes, blindly buy the dip, win money.
But what are you buying on the dip?
Well, what a great question, Joel. So we had Greg. So Greg Abel was just on CNBC, 30-minute interview, and Greg Abel, the new guy from Berkshire Hathaway. If you don't know Greg, we call him new guy.
New guy.
He's not really new though. He's been there like 20 years, but we like to call him new guy. He's decided that they're just going to rebuy Berkshire Hathaway shares because they don't, not that they don't like anything else out there, but they bought New York Times recently. They bought some Liberty One. They're not owing out there. They're 40% cash right now, holding 40% cash. They don't have fear of missing out. They're just rebuying their own shares because they don't see any other stuff that's sexy enough or value-y enough to go buy right now. It tells you a lot about this market. It's still, there's pockets of maybe cheapness, but Berkshire isn't striking. New guy's not striking. So they come out with an official press release timed perfectly with the interview too. Right before the interview, they come out to officially announce that they are restarting. Berkshire Hathaway is resuming their buyback. Didn't give a number, resuming their buyback, but also Greg Abel has recently bought shares of Berkshire A and will continue to put his entire salary, says, at Berkshire A, which is kind of a Warren thing. Warren had 99% of his net worth in Berkshire, and he always said that if you buy Berkshire Hathaway shares, your net worth will move directly with my net worth. This is why this company, Berkshire Hathaway, was the best, because the money managers were actually invested in their own company. So you've got a money manager completely conflicted with the other money managers that are being paid on salary and don't invest in their own funds, half of them. So it's completely different animal where, well, they have fear out there because if the stock markets fall 10, 20, 30%, they actually lose. That's why the Warren Buffett way was the best way. That's why investing in Berkshire was the best, because they were fully invested. There's other people that do that out there too. Stephen Cohen's very much in his own fund. Obviously, there's other ones too. But a lot of the money managers simply don't invest in their own funds. And I think that's a good question. If you've got money managers and you're investing in funds, ask them how much of the money manager's actual net worth is in this fund. When it's 99% like Berkshire, makes me a little more confident to invest with those people.
I'm looking at the filing here by Greg Abel, and he bought 21 shares of Berk A. That's $15 million. That's substantial. And Joel, you got a nice arrow, and you got a nice circle on the charts here. What are you looking at here in Berkshire B shares?
I mean, they didn't like that earnings report. They didn't like what he had to say at that investor meeting. I mean, they took that thing out to the woodshed on that. I mean, of course, a few things were going on with the market as well. Yeah. And now, this recent arrow here is when they announced the buyback. But, to emphasize Dennis's point, they're at 40% cash, which is not a bad number. And they're not really buying anything except to their own stock. What does that say to you? And they're probably selling other stuff. So what does that say to you?
Well, they've been selling a lot of stuff.
Yeah.
Boulder Bank America, a lot of it. Obviously they had a recent purchase with Google, but I mean, there has definitely been some sales there. So they've raised it up to 40% cash. That's got to be the most cash that they've had in a long time. Like it maybe ever. 40% cash. That's a lot. You sit with 40% cash, you're going to underperform this market, and maybe that's what's happened here. But when the market starts going down, you're going to do better than that. I look at Berk. They were obviously ticked off that their share price really got tanked maybe after the meeting. I think that this was intentional to come in here and say, look, we want to say that we still feel like our company is the best company out there. So we're going to resume our buyback, and we're going to go on CNBC and tell everybody we're doing it. So
just like Warren, right, Dennis? Just like Warren.
I don't think Warren would have did it that way. It's not really the Warren Buffett way, but maybe, he disclosed. They disclose what they're buying sometimes. To Becky, sometimes we get the inside scoop there. So, but he did. Greg Evans did a 30-minute interview. Didn't talk about like one company. I didn't hear one thing that they were going out there, one other company buying. They're just buying their own stock. Yeah. So that's telling you that they don't really like the value that's out here right now. So the company that actually invests in their own fund is not buying stocks right now except their own fund. So that says a lot about this market.
Great discussion, guys. A lot of good points in there. Shall we go to earnings?
Yes. AVGO.
Okay. Let's do Broadcom.
Yep.
Joel is pulling up the chart right now backstage. I can see it. He changed it. There it is. I'll get you the results here in just a sec. Results were in line-ish, a little better than expected. Guidance was fine. It was the call, folks. It was the call that did it. I'll read you the quarter. The quarter for Broadcom was $2.05 in earnings per share. Analysts were at $2.02. Sales, slight beat, $19.3 billion. Analysts were at $19.2 billion. Guidance was solid. They're expecting Q2 sales $22 billion. Analysts down around $20.5 billion. So call was scheduled for 5 p.m. About 5 to 10 minutes into the call, shares start going nuts. By the way, what was the expected move on Broadcom? Triple D, do you remember? Was it $20? $24?
18 maybe? 20?
18. Okay.
I can't remember.
Somewhere around that. Okay. So what happened on the call? I think this is what happened on the call. They mentioned that they expanded to 6 AI customers last quarter, including OpenAI. They also gave some Q2 AI chip sales guidance. They said they're expecting Q2 AI chip sales just under $11 billion. But I think that was definitely a secondary comment to the name drop that you got here with OpenAI. Broadcom shares here this morning trading up a solid $21, $22. That's about 7%, folks.
Well, the bar, again, was pretty low because here's a stock that's kind of been in the gutter. Here's a stock that you knew was probably going to say some pretty good things. We talked about it. I said in the STN room last night, I said, I'm not feeling good enough to just buy this stock through the report, but I was like, I kind of like it. When it pulled back to 310, I was like, they're just going to buy this dip. I'm like, we said it like, well, it's 310, 311. It's trade down here. I'm like, this is what they do. They're going to buy this dip. The S&P isn't even going down. Like the SPY wasn't even falling, Joel, when Broadcom went down $7 on the initial report. I'm like, well, S&P traders probably know it too. That's going to bounce right back. was down there for like 3 minutes, and then they buy it back all the way back up. And obviously, it goes to $339 now. So, I mean, this is just the market that we're in is now buy the good companies, reasonable valuations. Market loves Broadcom. I don't know if the valuation's that reasonable anymore. It used to be a lot more reasonable, but this market's in full buy the dip mode. So it's back. It never really went away, but we were spooked for a day or two because of the war. That is now, market's becoming numb to those headlines as well. This is like full on and now they're buying the dip in software to the point TTD we could move into, which had some news with OpenAI and also an insider buy last night. Let's stick with
Talk
AVGO.
Yep, talk AVGO, Brent.
Okay, so Joel Kleina over at Woodbush, friend of the show. Love to hear his commentary. We just got a tip. Michael Crockett, Sienna and Hood. He's looking for some tickers. We'll get to those.
Those are
a little bit later. Thank you very much for the nice. That is a very generous tip, Michael Crockett. Joel Kleina giving some commentary here on the Broadcom results. He had similar sentiment as we're suggesting here. Importantly, shows another uptick in AI demand. I want to highlight a couple things here. He said a couple stocks here. Joel calling these the Broadcom bank shots, pointing out that Credo shares up 9% on this. Astera Labs, ALAB, up 7%. Marvell, up 3%. Celestica, I know I'm going fast, Joel. CLS, up 2.5%. Arista Networks, ANET, up 1.5%. Even Micron, up 1% here. Again, Joel Kleina calling those the Broadcom bank shots, assuming he is, it's a snazzy way to say, here's some peers that are moving on the Broadcom report this morning.
Okay. I don't want to, first day back, haven't really looked at the chart, getting oriented in the market. I don't want to really say that, this is the most important chart ever for the day, because that would be a little bit dramatic. But here's a stock hit an all-time high, sold off hard. So basically, I don't know. I mean, still in the bull market, long term, short term. You get a nice pop off earnings. You get over 340. You run into a triple top here. Man, this thing's got to hold on today. This thing is gotta hold on. I love to see it close over 340. You got a trio of highs in this thing. But, I mean, bag holder central still. I mean, from the move from 440 to under 300, you got to bounce. I mean, longer term, can you even hold the 50-day here? Kind of finding support to 200-day. Man, for the resilience and for what they did to NVIDIA when I was gone. Whoa, breakout over 194. You got to own NVIDIA. This thing is going to 250. And then rug pull here. So I think it's important for Broadcom. Hold on to these today. S&Ps are already having a major leak. We're over 40 handles off the pre-market high. So bad.
But do you honestly think they're not going to come and just buy the dip anyways on the S&Ps? I mean, it's just
no. I don't.
Joel, do you think, are you going to call the top right now, Joel Elconin coming back? Because the markets are always weak when Joel goes away. He's back at his desk. And you're going to call a top with you coming back to your desk? It's completely against. The trend is your friend, Joel. This is completely against the trend of selling markets when Joel goes away.
I
refuse. I'm telling you, I am raising cash in my long-term portfolio. I've been doing it for the last few weeks here. Just trying to move out. And on rallies, I've been selling some stocks because I feel like the uncertainty from AI disruption is, really the major fear here out now. I don't know where we're going. The war will pass. We'll have good times again where, the war is over and we'll move on eventually from that. It seems like the market's already, like I said, becoming numb to those headlines. But AI is not. AI is going to change a lot of things. What does that mean long term? I don't know. Like Gene Munster was on CNBC yesterday, and he said he was at some conference or whatever, and he was talking to CEOs. And he says a lot of these CEOs are talking about 30 to 40% cut in white collar jobs. Like this is what the CEOs are saying. That's what Gene Munster said on CNBC. I'm like, what does that mean? We talked about this in the STN room. I'm actually at a point where I just want to trade everything. I don't want to invest in this market because I don't trust it. But we could trade everything. So I'm at a point where I feel like taking my long-term investment money and just putting it all in my trading account. My trading account always outperforms anyways. So why not just trade it all? You blindly buy the dip, but you can also manage the risk better that way too. So it's tricky. This is a very tricky investing environment. And Greg Abel did nothing to calm my concerns here today.
No.
Let's say
I think the opposite, Dennis.
The opposite. You're not buying any stocks up his own. So the risk is really high here for an investing. So investing cap, I don't know. A lot of danger. Trading cap, we're still buy the dip mode. So if you're a trader, you got to still be buying dips right now because this is AI thing that's going to play out over the next year or two is still not today. So I think as a trader, I buy dips. As an investor, I'm lightening up on rips and getting myself a little bit more cautiously invested.
Okay, we don't want to forget about Michael Crockett here, right? He just threw us a Jackson, right? So nice move in Hood off that 70 bottom, and you got a nice move in Bitcoin.
Related.
Oh boy. It doesn't look like it's giving anything back today. I'm just going to give you real short-term numbers for now, Michael, and then we could pick it up later on. But you got a little gap to fill. This is just a minor resistance point, nothing to write home about. You got a gap fill at 88.22, or excuse me, the gap fill was 85.21. I think that's very important to get up there and clear that area today. But longer term, I mean, 88, I'd have a target now of like 88.50. And the longer it took to get to 88.50 and the more that it struggled, the more it give it a red candle, then I'll look for this thing just to roll over and just die once again. So there's your short-term levels for Hood. Sienna. Woo!
I want to just comment on Hood before you go on because I recently bought Hood my long-term account. So, and again, this, maybe just, but I feel like Hood's still best of breed. I believe in investing in good companies at reasonable valuations. It's 30 times earnings. It's not like others. But I tell you, Vlad is the best. He has just done so many things to disrupt industries everywhere. Getting into the prediction markets here now, getting into everything else. I believe in Vlad. And that's more so, the reason that I bought. I haven't been buying hardly any stocks in the long-term portfolio, but I bought Robinhood around $75. I didn't get the very low. The low was down at 69, but I'm in from 75. Feeling okay about it, but still, I'm still not just feeling good about investing right now in markets altogether. But I mean, stock got cut in half here. At a certain point in time, you got to say, we've come down a hell of a long ways here. I think, if you were ever going to invest in Hood, and you believe that, the markets eventually go higher in the long run, and eventually, crypto will rebound and stuff. Hood's not a bad place to be.
And also this has just been an incredible move too. I think, longer term, I think, a long-term perspective, I would not be, you have to be long down here. Even if you didn't get long now, leaning on the low of the move. I mean, the 50 days way up there at 97, a 50% retracement is closer to 110. I mean, if the world doesn't end in the next couple weeks and we just keep plodding along and Bitcoin keeps plodding along, you could have a good long-term buy here in Hood. So that's a perspective.
You're never going to get Hood at 10 times earnings. It's just not going to happen.
Nope.
You're not going to get it. So it's 30, it's 33 now because it's come up. I bought it at 30. I just felt like it got to a point where it's not crazy expensive. Think with Tesla. When Tesla got back to $100 like 3 years ago, and I was saying, well, it's 30 times earnings here now. This is back in 2022. I'm like, you're never going to get Tesla at 7 times earnings like Ford. You're not going to get it there. I mean, you had to just blindly go in and say, okay, I'm willing to pay 30 times earnings because this is one of the best companies. Again, the Warren Buffett way. He's like, you don't get the best companies cheap ever. You just get them a little bit cheaper than they were. He's like, you can't, great companies don't trade for 5 times earnings. It just doesn't exist. They trade for 5 times earnings because they have no growth or they have, declining sales or something bad. Companies that are trading 5-6 times earnings have a lot of bad stuff going on, like HPQ. I mean, HPQ is a good example here. We could go. We're going to go to. Did we do Sienna? We're going to do Sienna in a second.
I'll do Sienna. I got the well, Sienna
I'll
had
tell you my tangent on HPQ, and then you can go back to Sienna.
well, Sienna had earnings. Brent, do we want to? I mean, because this makes it a little bit more difficult.
Yeah.
Do you want to go the earnings there, or you just want my quick analysis?
I think just your quick analysis. Yeah.
Well, do the earnings. Yeah, no, the earnings matter. It was actually up $10 ahead of the earnings report here. High bar. Here is Sienna. The stock is very near all-time highs. Was trading up last night. The stock has come from $50 a year ago to $340. It's gone a long ways. Again, we know hardware has been in favor here. They've just bought hardware stocks relentlessly and sold software. That trade's starting to come off a little bit here right now.
You're right. The earnings are important. I just kind of panned them this morning, so that's my bad. The quarter was solid. They reported $1.35 versus $1.17. Sales also beat. The Q2 guidance was good. They are expecting Q2 sales 1.45 to 1.55 billion. Analysts are at 1.44 billion, so solid. But they raised the 2026 guidance pretty substantially, I would say. They raised the 2026 guidance. The prior range was 5.7 billion to 6.1 billion. They're now at 5.9 to 6.3 billion. So they raised the guidance by, a good $200 million. Analysts are closer to a little bit under 6 billion. Stock trades lower though.
Boy, I wish you would have been on yesterday because you had the all-time closing high at 353.73, and it actually ticked up there on the 25th as well. And you did see that level in yesterday's market, just barely. So that's like the super long-term number right now is getting back to, making that get back to that all-time closing high. I think right now you got to worry about the mark. Are they even going to get it back to 43.55? So far, the bounce has not indicated that it's going to get back to the mark. And then on the downside here, Michael, if you can find support under 320.32, then go right ahead. I don't see another support, no lows, no two lows in the same area till you get to 300. So, little bit weak here after earnings, big run in Sienna, but looks like there's pressure on it today and some overhead supply developing as well.
Want to just give a head
software names like coming back here. That's a little bit at the expense of hardware names here. So it's this guy they got overbought, man. I mean, so it's due. Like I would still be buying dips on hardware stocks, but what I've bought recently was Cisco, Marvell. I've been buying hardware names that haven't gone yet. So that's where I've been kind of jumping into my longer term stuff. So, but software names have been coming back. The IGV has just quietly rallied over 10% from the lows. That's in the last 6 days. That's the IGV. So there's been a lot of bounce back in the oversold software names. We've been talking. They're so oversold, man. So even if you believe that AI is going to disrupt all these companies, doesn't mean there's not tradable bounces here. ServiceNow, McDermott, they're coming back here. Obviously, put the big position in here now. It's turned here a bit for software to the good. Where they probably were. Maybe some of these companies are going to survive. Maybe Bill McDermott's going to be right. Maybe Benioff, who was on CNBC again last night, talking about his stock, which he can't stop talking about because he's so upset about it. It's going to end up being right. He says he was saying his quarter, Benioff, nobody talks stock up better, was maybe the best quarter in the history of all companies. And the stock goes down. That's what he said on CNBC last night. I mean, he's just, he's saying that's what he does. That's what he says. He's like, our revenue growth, everything we're projecting, it's just unbelievable. And he doesn't get why his stocks trade like 18 times earnings, but maybe he's going to be right. Who knows?
We are going to get jobless claims here in just a sec. I don't expect the market to move. Jobless claims 213,000, lower than expected versus a 215,000 economist estimate. Did the market respond? Nah, the market's not going to really care about jobless claims. We do have our Bureau of Labor Statistics employment situation report tomorrow at 8:30 a.m. in 24 hours, folks. That'll be the important piece of data here that we have this week. Dennis, a good segue too, talking about Bill and ServiceNow and maybe even Benioff. The trade desk with a big overnight insider purchase, about 6 million shares. The company's president and CEO, Jeff Terry, buying 6 million shares. I mean, it's a lower price stock, $25. This is a very large purchase. This is a very large purchase. However, I do not think that this is necessarily why the stock is up so sharply today. Why I think the stock is up so sharply today is there was the information report, great source last night, saying that the company and OpenAI held talks for doing ad sales.
Yes.
Couple of things here. Give me 1 sec. I just had a little note jotted down. So I want to take a couple pauses here for some education. How do you say it, Dennis? Pause. Stop right here. Sure. The importance of a 1 minute chart. Joel and I have battled eternally about the importance of a 1 minute chart, and I want to make the case right here, right now. You go to a 1 minute chart, first thing. Second thing, you find that exact timestamp when the filing hit for this big insider transaction. You find the exact timestamp for when that information report came out. Exact timestamp for when that information report came out was last night at 5:40 p.m. Eastern time.
Yep.
Stock started rallying
right on it. We mentioned it in the FTN room. Yeah, right.
So yes, that very large insider purchase did move the stock. You can go find the time of that filing. It was around 8:40 p.m. You can see that the stock did move a little higher, but I think that the case here is it's all about OpenAI. Other little piece of education here,
for
folks.
sure.
This is a little disclaimer, a little warning. The report was that the company held talks, past tense. They held talks. Could they still announce something? Of course. We could see something today. We could see something next week. But if they held talks, why aren't we hearing that they held talks and they announced a deal or something like that? I went back.
We don't know if these talks will turn into anything here. So stock pops 10% last night just on that headline. Then you get the insider buy on top of it, and now we're up 20. And everybody's like, whoa, there we go. OpenAI trade desk, we're coming back. I mean, give a perspective here, folks. The stock was $140 a share a year and a half ago. It's $20, $30 now. So this has just been a place where capital has gone to die. I'm not going to be buying this up 21% here this morning, saying this is the turnaround story. It wasn't oversold? Absolutely. Did we have a capitulatory bottom? Probably. Do we continue to just rise from here and V bottom and go all the way back to 140? I don't think so.
Quick technical thought before we go to our guest here. You got a nice pop in the pre-market to the $31 area. Let's tighten this up on the 15-minute. So 31 up for today until you get further price action, 31 to 31.77. That's the 50-day moving average. I'd be more of a seller than a buyer in that. I mean, it could go up $5, $10, $15, but man, if you bought the dip the last 5 days in this thing, ringing the register off the earnings, not sure what the expected move is, but first things first, take out that pre-market high and take out that 50-day moving average at 31.77. All right, it is out. Yeah, let's go to a guest. Let's get some wisdom here from Jeremy Schwartz from Wisdom. All right, good morning, folks. We are joined by Jeremy Schwartz, CFA Global Chief Investment Officer over there at WisdomTree. Jeremy, how you doing this morning?
Great to see you, Joel and Dennis, waking up early in San Francisco
I know.
For this.
The girls didn't say, he's in traveling that day. He can't come on. They stuck you with it, and here you are, rise and shine. So I was in a cave for the past week, okay? And I came out of the cave, and, when I went to the cave, the S&Ps was right here. Then I came out, and there's a war. There's a war. I don't know what, whatever you want to call it. I don't think World War, not yet or whatever. Geopolitical risk are heightened. All right. I mean, does that present opportunity in the market, or is it time to just buckle down and get super conservative in our portfolios?
Yeah, well, I do think people's natural instinct is with these geopolitics to say, get really worried about the implications. And there is a lot of scary headlines out there about this big war that's happening. And So people often will hunker down and go to cash. We do believe and launch this ETF that's in my background, Geo Alpha, that is really trying to position people for the opportunities that come from risk like this. And I think most people have been just in the U.S., like, as we talk to clients, maybe like 80% US, some clients 100% US. And we say, hey, there's opportunities around the world. There's a lot of sectors that benefit. And we do actually believe there's going to be this defense tech super cycle over the next decade that will be opportunities in Europe and in Asia. A number one theme that we see in our platform today, we have 160 billion. In Europe, a little bit over 60 billion, but we've seen $1 billion come into our European defense idea. And that is like the direct, okay, we need to, we're in war, we're in conflict, and people see the spending on defense. That's like the first order effect. But the second order is, you see these drones that are going out, right? And you see Iran sending drones. We're sort of taking the drones and doing our own version of them and sending back one-way drones. But all this spend on defense is going to lead to a lot of innovation for our consumer lives. You'll start seeing consumer applications of drones, and you'll start seeing just the ancillary technology benefit. And we haven't really seen Europe and Asia be the leaders in tech like the US. The US has been the only game in town for big tech. So I'm super bullish for the next 10 years, just what I call, again, the defense tech super cycle of the run to international that started last year. Is going to continue, in my view, and people have been just under positioned for that. And yeah, I'm not hungry down in cash. I think people should be thinking about the opportunities.
At the expense of our market, though? Or is our market just going to be stable?
Well, you're seeing rotation within our market too. It's been the year of equal weight value dividends versus just the old leaders. So there is some of that natural rotation. I do think you're going to have a big IPO market for some of these large private companies coming public. Now, some people say, oh, it's going to suck all the oxygen out of the room, and has been a sign of tops when you get these large IPOs. But I do think the hyperscalers that were Amazon and Alphabet and Microsoft and Meta, these big hyperscalers, you're going to see OpenAI, Anthropic, XAI, all these new versions. There's real big opportunity coming from all that. So, I do think the winds are shifting a little bit. I do believe consumers will, and sort of small caps are going to benefit from all this AI shift. There is fears about AI. That's the other big carnage in the market, is software is being destroyed because AI is going to replace all them. I think a lot of that is way overblown. And as we talked, I think last time I was on here, we were talking about some specific names. So I do think that also is when the narrative's out there.
Jeremy, I want to take it back to that international commentary here, because international markets have been outperforming for the better part of a year and a half here now, especially when you consider the US dollar weakness on top of that as well. That's another. But we've had this, since the war started, international markets have been crushed. US SPY is just hanging out and, no problems at all. But EEM, if you're looking at emerging markets, was $63. It's down at 58. That's a quiet little 9% fall. EFA, similar story, was up at 105, tanked to 97. We have bounced, but we're at 100. So you're down like 6% here too. So you would be using this opportunity to maybe start getting some international exposure, because we just had a hell of a dip on international.
Yeah, well, and also they do have currency, as you said. So the dollar was down 8-9% last year. What you're seeing also is some of that is currency move, because the dollar's rebounded a bit off the lows. And I try to separate. I'm one of the few people who talks about trying to separate those decisions.
Sure.
And in my background, you'll see OPPE and OPPJ, my two best international ideas, I think. And they do have a flexible approach on currency. Today we're fully hedged in Japan. So the yen basically weakening the last decade has not hurt that fund. And now, so we can actually add yen exposure at some point, but we're still fully hedging it. In Europe, we're more hedged than not. So we're protected from the euro fall. So they probably held up better in this sell-off. But I do think and you could say I'm a perma China hawk, but I'm still hawkish on China. I'm still a little nervous on where that a lot of this Iran conflict is about China and
Yes.
the pressure on China. So they're now the typical Trump style is escalate to de-escalate, and he's got a meeting coming up with Xi. Now it's interesting, just overnight there's a few headlines that China's instructing companies to buy back and do more dividends, or to pay cash share. Maybe it was more dividends than buybacks, but pay more returns. But they also lowered their GDP estimate to 5, one of the lowest GDP targets they've had in like a very, very long time. So they're under pressure, and the sort of oil conflict is not helpful for them. I just think that that conflict with China is overhanging. Now, you could say Trump gets us a masterful deal and these stocks are super, super cheap. They take off. I understand that's definitely a scenario, but I just think it's got more downside risk ahead. So I am being selective in emerging markets. I'm not just broad EEM. I do think, Japan is still top idea. It is. You can see with Takaichi and Trump getting along. You think now and they're still cheap. Like, it is still 14, 15 PE, growing. The Berkshire
What's the WisdomTree Japan? What's the WisdomTree Japan ETF?
The one everybody knows is DXJ.
DXJ.
And that's sort of $6.5 billion fund, and has been our top inflow leader this year. So people are coming back, but sort of quietly is this OPPJ, and that is I think one of my favorites. The Berkshire leader was just on CNBC interview about doing more buybacks, but you know what Warren said, and in his latest annual letter, he talks about the 5 stocks he owns. We own all 5 of them. They're our top 5 holdings. And he talked about why they hedged the currency risk, so they didn't have any exposure to the yen when he bought them. And they would love to own more of them, but they're like sort of capped out in terms of what they thought they could do. And so, OPPJ really helps you go more into the same 5 stocks that they have, plus a bunch of other names. We're rebalancing that portfolio right now. I think there's a bunch of AI names that are interesting in Japan, sort of that you need their materials. They're key to the whole semiconductor supply chain. And so they're underappreciated as being a key related component. So it's often you'll see a little bit more volatility when the AI names move, because they are direct, tied to the AI trade as well.
We're on the line with Jeremy Schwartz. He's the chief investment officer at WisdomTree. So I'm trying to put this, emphasis on defense stocks, and especially in Asia. And I'm trying to put this in the context of, the conflicts that we're having right now. And to me, the escalation, of defense spending is not exactly what I want to hear. As far as the world situation goes, and you're talking about it, is that this, increased defense spending and drones and everything is eventually going to, translate to the consumer, better for the economy here. But, walk me off a cliff here. If everyone's in Asia, defense spending, a conflict here and everything, how's that bullish?
Well, it's the innovations that come from it. So, like, you think about things that impact your lives today. You couldn't live without your cell phone. Well, you say, where did the cell phone come from? Well, it goes all the way back to World War II and the development of communications devices and walkie-talkies, and you get all sorts of new inventions because of the increased spending for defense tech. And the internet came from the Sputnik moment in 1958, which led to the creation of ARPA and DARPA, that led to the foundations that created the internet. So, what you don't know is what those new innovations here, but because they're spending so much more on developing these new technologies like drones, that is going to lead to new tech that will have a profound implication on everybody. And so beyond just defense stocks, like that is where I'm saying new innovation is going to surge from all this spend. And so I do think that's sort of the broader case for international, broader case for Asia, Europe, that they have been laggards on having real technology leaders in Europe. But that's going to shift because they're going to spend a lot more money on defense.
Okay, let's talk about the commodities markets as a result of the Iran situation. Gold and oil, a lot of good portion of people's portfolio. I mean, gold or oil is rallied 10%. The Strait of Hormuz is closed, and everything's okay. Talk about the commodity impact of the current situation.
Yeah, I think and certainly things can get worse, and obviously it's moving with the headlines, and real impact of just the disruption that's happening there, and Iran attacking different pipelines across the Middle East. I think we would fade the move in oil a bit. If anything, I'm looking to reduce exposure on the pop higher. Energy has been by far the leading sector in the both the stocks, and then on the commodities, it's moving higher. I do think gold has it was overshadowed by Bitcoin for so long within the inflation trades, but it's certainly moving higher. You see, even in Asia, where they're sort of running out of gold bars at different places in terms of physical markets. I think the move of gold has been driven by, still not being driven by U.S. investors. I think the typical U.S. within the ETF world, which is like my world, $14 trillion of assets, commodities is less than 2% of that, so like 220 billion in commodities. So I think people have been just way under allocated. I think people, one of the questions is, what am I going to sell to buy gold? So that is a very, very tricky question. I created ETFs to add gold on top of your core exposure. So something like GDE lets you keep your core S&P and not have to sell gold. So that'll be one of the top performing equity strategies the last 4 years, because it has gold on top of it. And I still think that is the biggest opportunity there, but we're sort of selling into the oil rally in some of our strategies.
Okay, there's always something out there to shake up the markets, right? And there was a big piece, a big bearish take on AI coming from Trini report here, and how the devastating impacts of AI on white collar jobs, blue collar jobs, everything. I mean, you always see stuff like that. There's always an instant reaction in the markets, right? How are you breaking this down?
Yeah, I've been a fan of Citrini since he came. I was one of his first early clients. We subscribe. I get all the notes. I think he's one of the very sharp thematic investors who's big on the AI trade early on, had a lot of interesting investors. So I really do respect the research they put out. And, it was like the dominating narrative on Twitter in the last few weeks. And so much that our senior economist saw it and said, wow, this is like, now Citrini would say this was not his baseline view. He's still like 90% of the market, but he was giving people a scenario that could develop. And it was, trying to push people's thinking, engage in dialogue. So it's not like this was his forecast of the main scenario, but what we went from the first principles of the economics of, if we can really, the example we gave, and we said AI is not apocalypse, is going to lead to real innovation, massive productivity growth. And, you take a scenario of if you could double your productivity and go from like a 5-day work week to a 2.5-day work week, your real hourly wages go up. And then you could, but will everybody just only work 2.5 days instead of 5 days? No, a lot of people will say, hey, I could work a little bit more and earn more income. And so it was it was a sort of more optimistic take. We do think that is one of the things people worry about, debt and deficits. And even Elon has said the really way out of the debt and deficits is we've got to have robotics, we've got to have AI lead to faster growth. But this was a bullish case on AI leading to better productivity enhancements. Maybe we're working a little bit less, but it's not going to be some doomsday scenario that piece forecasted.
Okay, all right. So I can sleep better at night. I don't have to worry about AI. I don't have to worry
work
about
less.
the Iranian conflict. Jeremy, I mean, I couldn't think of a better guest to have back on pre-market prep. Jeremy Schwartz, Chief Investment Officer at WisdomTree, joining us super early out there from San Fran. Thanks, Jeremy. Appreciate your calm, cool, and collected demeanor. We'll get you back on again in April.
Thank you.
Thanks, Jeremy.
Hey guys. Let's keep the train rolling here. Pre-market prep.
Yep.
Woo! Let's go back to earnings. Burlington, BURL, one
Yeah.
of the off-price names that you were mentioning, coincidentally, Triple D yesterday.
Yeah,
Report.
Ross was up. Give us the report.
Report was fine. They reported earnings $4.99. Analysts were at $4.75. Sales were fine, $3.6 billion versus $3.57 billion. Guidance was weak. Expecting Q1 earnings 160 to 175. Analysts are up at 182. The sales guidance was also weak, and then the 2026 guidance was a little less weak, but it was still weak. They're expecting earnings 10.95 to 11.45 per share. Analysts are up around 11.30 despite a beat for the quarter, but maybe some light guidance. Shares trading up 6%. Is it because this is just where retail investors want to be, the off-price space?
Yeah, like I mean, Ryan Craver gave him props yesterday for Ross stores. I mean, this is just Burlington, Ross, TJX. These stocks just continue to find ways to go higher. Even when the guidance is light, the stock goes higher. Now, I would not buy it up $19 here. I thought the Ross report was better than this one, so I'm actually surprised that it's as strong as it is. So I would be a seller under this pop on BURL. But overall, you know, these are companies that you just buy on dips because they just continue to go higher. And the shoppers go there no matter what the economy is doing. But I would say I'd more be of a seller this morning than a buyer.
Yeah, well, someone sold it $10 higher, Dennis, because we got $9 higher as we got all the way to 328. I don't know how that fit within the expected move, but the way things are setting up right now, I'm going to forget about the chart on the left. I'm going to look at the action right now, 319.32. I see one daily high at 321.73. Let's see. That's a target. Above that, well, hey, yeah, you can go for the pre-market high, but just remember 2 days ago, this stock was under 290, and now you're back knocking on the door at 320. A lot of people getting a lot of money back. And also, this is a slippery stock. You know, it's a $300 stock, not super liquid. So if you're buying off the hot, man, you better look for some big old bids out there.
You guys want to do some ratings here real quick?
Yeah,
see what
do
the sell side's doing?
Cool. Yeah.
All right. We have a few notable ratings here. Where do you want to start today? Triple D, you want to do AIG?
Yeah, let's go to Goldman. They were busy actually in the insurance space here. I've got it on my phone. Let me just bring it up here. You give us some color here too if you want, Brad Stewart. But Goldman did a whole bunch of stuff in insurance. So they, just to sum it all up, they are upgrading AIG to buy, downgrading Allstate to neutral, and they just continued coverage on some of the other names as well. But basically a pairs trade here, upgrading AIG to buy, downgrading ALL to neutral here. Joel, thoughts on AIG technicals?
Geez, AIG. Have we mentioned that show since 2008? Oh, we weren't doing the show in 2008.
It's not a stock we cover a lot.
Yeah, boy, oh boy, oh boy. I mean, and a rating in insurance stock. Does anybody really care? I will just look at the 2-day high coming in this at 80.30. Looks like you touched it a little bit in the pre-market. So looking through follow through for on this one through the 2-day high, but this chart really doesn't do anything for me. He's had a nice rally. If you're a fader of these kind of moves, then you're selling into strength, not buying it up here.
Just a little color here. I'm going to take a peek into the fly. Goldman upgrading to buy, raising the price target from 83 to 90. AIG offers peer high earnings growth and an improving retune on equity over the coming years. Goldman says that while AIG is not immune to cyclical pressures, its earning growth is supported by a, quote, strong underwriting position, accretive deals that should increase operating and premium leverage, and its capital flexibility.
Okay, and the other one was
Allstate. Yeah, was downgraded to neutral here. It's up at like the level of levels, Joel. Even I could do these technicals here. This 215 area has just been a wall. I don't know if it's eventually getting through there, but it's just been at the wall here for like 1, 2, 3, like a dozen times in the last 3 months. Is pounding its head up against 215. Can't seem to get through it.
Yeah, trading down 218. Been just hanging out near the high of the move, but looking for a downgrade, so it's not exactly going to be pushing it. But major resistance, and you know what? I don't see major support. If you're a bull of this thing, you do not want to see it take out Tuesday's low at 210, 209.89, 210 area. A lot of air underneath that, but it's Allstate. It's an insurance stock. I guess it moves pretty good. I guess it has a $3 range.
Bounces around a bit.
Yeah, boy, ratings on insurance stocks.
I'll list off all the other notable sell side changes that I had on my radar, and I'll let you guys pick which one we want to focus on. So Dow caught an upgrade yesterday, Dow Chemical. So they also got caught an upgrade away from sell at BMO. CoreWeave, a new underperform rating at Bernstein. American Air downgraded at Rothschild. Meta getting one upgrade and one downgrade. And last but maybe not least, MongoDB getting an upgrade to buy at Scotiabank following those results this week. Which one do you guys want to
I've
focus
argued Meta for an efficiency trade. We know Zuck is ruthless. And I think, like Meta, if we're going to start talking about AI efficiency a la XYZ last week, I think Meta is primed to get a lot more efficient. We looked at their, software engineers. I think when we looked at their, how many did we say they had? Was it like 300,000 or something?
I thought you said 350.
350,000 software engineers. Just think if they could cut that in half, how much more money they would make. And we know Zuck is ruthless. So I'm like, if you're thinking about AI efficiency trades, I think Meta is the trade.
And that is what actually you're speaking to, what this one analyst that downgraded the stock today, Arret, saying the firm says the company is lagging on AI monetization and its surging investments will lead to margin declines. But so now my comment, I mean, if they're going to be doing AI efficiencies, maybe that downgrade is resolved right away. On the upgrade side of things, there was a firm, Earth Group, who upgraded the stock to buy. Just a valuation call citing historically low valuation and Meta's continued solid user and profit growth for the upgrade.
Don't really like when you're a company, you're thinking that their growth to their path to growth and prosperity is by cutting expenses. That's never, to me, never is a sign. This is just a messy chart. There's just no way you can put it other that it's just messy. The earnings pop and the gap fill was just faded brutally. And now you're on your way back. And I'm just going to look at this entire move that it had since late November to early or late January. And let's decide whether the 660 is going to be support or resistance. And that's halfway back of that move. And it's just been looked like it was going to break down. It came back to it. But I don't know. Matt, very, very messy after earnings and trying to crawl its way back.
All right, folks, we got just a minute or so here. Want to give the other co-hosts here an opportunity for a little final thought or two heading into market open about a half hour away. Guys, either you want to take a little final thought run?
I mean, you get these 50-point dips, the S&P and the money managers coming. I would think 680 yesterday's low on SPY. I would think money managers coming again. I don't see any reason that they're not going to come in and buy the dip here today. Nothing is worse here today. AVG orders were pretty good. I'd be buying the dip if I was a trader.
I'll just take the other end of that coin, the other side of that coin.
Because he hasn't seen it all last week where they just relentlessly bought the dip on everything. I know.
Yeah,
I've tried to get bearish, Joel,
100
a couple times.
handles.
Whenever I try to get bearish, the market just bounces right back. Like the bearish call is just always wrong.
Okay.
Like Todd Lee just being eternally bullish. It's like he's on CNBC all the time because he's a genius because he's just eternally bullish. I mean, we want to be bearish. That's a harder call to make, right? Like it's such a harder call to make, like a bearish call. It's so much more respected. But I mean, it just doesn't work out most of the time.
Okay, I got a disclaimer here. And the book I've been reading on vacation is 1929. Okay. So that has nothing to do with my outlook on the market. Okay.
Not at all.
Not at all.
Not at all.
If you think you want to be like buying dips today, that's fine. I mean, a lifelong strategy has worked great, but I'd rather be selling rips. And I think that, you did get near 6,900. You did get to 6,900 in a pre-market. We're down now 30 handles from there. Keeping an eye on Broadcom as it just withers away here. I think for the longest time we had a range from like 6,800 to 7,000. Remember, we're like, oh, we're breaking above 7,000. Nvidia is going to lead us to the promised land. Well, I think with everything that's going on now, you got to ratchet that range down. And we haven't hit 6,700 yet, but I think the major resistance here is at 6,900. And I expect the major resistance over the next days, weeks, and months to be coming down. That's it. Am I bearish? I would say I'm super cautious. And I think that's a good way. I think that's the way you investors should approach this market. There's a lot of uncertainties out there. The market, one thing the market doesn't like is uncertainty. And that's what we have.
This market likes everything.